Nigeria's central bank governor has said the Apex Bank will continue to remain cautious on stability to avoid reversal of capital flows and inflation being out of control. We caught up with Sanusi Lamido Sanusi, who is governor of Nigeria's central bank, for more.
Well, you know, people keep talking about hot money, but portfolio flows are not a bad thing. What's important is to know exactly how much of that you have. For example, if you look at what's going into equities, you might say there's a lot of foreign exchange that's driving the equities market, and it is something that we should look at, and we should keep an eye on it. But if you look at the fact that many of those shares are trading at below book, and they're not at a level where you would say there's actually a bubble being formed, you might say it's a bit early at the moment to start worrying, unless you have a major shock. On the fixed income market, obviously, we're getting depressed yields, and that's for a number of reasons. It's, first of all, the money came in because we did have attractive yields in the first place. But it's also coming in because of high oil prices, because of increased foreign reserves, because what is seen as better fundamentals. So most people would probably continue to go for safety so long as we are able to maintain stable exchange rates. People are able to make a much better return, even at 10%, 11% than they would if they invested the money in Europe. So that's where I look at it.
Now, analysts say the MPC is slightly too cautious given the buffer that oil prices provide right now for the Naira. Also, some say that the current inflation outlook makes a case for some monetary easing, maybe a slight review of the cash reserve issue. How do you react to that?
Well, I would rather be accused of being too cautious than being too careless or reckless. So that's all. It's a matter of opinion. How do you define too cautious and how do you define too reckless? I mean, we have delivered on stability, and we do not want to place that stability at risk. And I've always said if people think that they can take stability for granted, they should try instability. We don't want to have a reversal of capital flows. We don't want to have inflation out of control. We don't want to be fighting and be following exchange rates left, right, and center. We're simply saying, give this time. Let's see the direction. Let's have clarity on outlook before we change. Things are working so far. Why do we just change for the sake of changing?
Fixed income yields have declined significantly over the last 6 months. Does the MPC expect this to stimulate banks a little bit to lend more to the real sector?
Well, we're hoping that certainly as the yields go down, we would some of the incentive to just put resources into fixed income would be reduced, and they'll start looking for alternative channels to lend. However, I must say that this is not just about liquidity; it's also about risk. And a lot depends on how much progress we make on the structural reforms, what we do with power, for example, and how that translates into improvements in the manufacturing sector, reducing the cost of doing business. What we do with other reforms around land, around registering businesses, what happens to the security environment, because all of these things are important. I mean, they're all risk factors. Lending is a nexus between capital, liquidity, and risk. The banks have capital, the banks have liquidity. What we now need to do is make sure that we bring down the risk of counterparties and sectors such that it makes a lot of sense for them to move away from risk-free to some of the riskier assets.
Concerning the oil price, at what level will the MPC become more concerned about a shock for the currency? $90 per barrel, perhaps?
If you look at the effective price of previous budgets, I mean, we say a benchmark of $75 or $72 a barrel, but because there's been a shortfall in output, by the time you have augmentation, you're really operating at an effective oil price of over $90. So frankly, by the time oil price gets to below $90 a barrel, if output is still underperforming, then there's a major issue with government revenues and deficits.